Here to tell us what he expects from the FOMC rate decision tomorrow is Brian Jacobsen from Wells Fargo Funds. Welcome, Brian.
Thanks for having me.
All right, lots of talk about tapering. What do you expect on the tapering front tomorrow?
Not much. I think that it's way too soon for the Fed to begin tapering. Despite all the reports to the contrary, the economy is still weak. We still have, I think, disinflationary, perhaps deflationary pressure. The Fed is very concerned about mortgage rates going up to 4%. They don't want to snuff out this housing recovery. And so I think that if anything, we might expect to see them shift the composition of their purchases. Let's call it operation rotation, a little out of treasuries, more into mortgage-backed securities, and they're going to probably try to prop up this housing market.
With all this talk about tapering, is the Fed confusing people? Ben Bernanke promised more transparency, but right now you have the market moving over John Hilsenrath columns in the Wall Street Journal.
There's perhaps a little bit too much transparency at this point if it begins to have conflicting messages going out there. I think the biggest problem was on May 22nd when the Federal Reserve Chairman went off of his script, off the prepared testimony, and actually started trying to say that the Fed would eventually lower the pace of purchases. He confused people, perhaps used the wrong preposition in his statements, and got people thinking that, oh, maybe it's going to happen at the June meeting. So I think it was actually just a miscommunication on his part. There isn't too much transparency. I just think that they need to communicate a little better.
How much longer do you think Ben Bernanke is going to stick around? President Obama was mentioning I think it was today, that he says that he's been there longer than most people thought he would have been.
Yeah, I'm just glad that the president say that he overstayed his welcome. And I don't think that he has. I think that Ben Bernanke has done a tremendous job, but perhaps, let's say if he does decide to go back to Princeton or wherever in January 2014, no policy is going to change as a result of that. So I don't think that the chairman really wants to stay on, but he probably would do if he was tapped on the shoulder.
So is the stock market all about the Fed at this juncture? We do have second quarter earnings coming up in about 2 or 3 weeks. So it seems like the only thing moving the market is anything coming from Ben Bernanke. What about earnings?
Sure. Well, on the margins, it's all about the Fed right now. But I think that what we have to see is that on the margins, it's pushing it up or down maybe 1 or 2 percentage points. So the firm foundation at around 1,600, I would say, on the S&P 500 is really based on the fundamentals. But anything above and below that is really about discussion as to will they taper, will they not, when will they do it. Earnings, we think, are going to still stay positive. We're not going to necessarily see a robust growth in earnings, but you aren't going to necessarily see it rolling over like a lot of people might be fearing.
So finally, how do you invest with all this going on?
Well, I like to actually just keep focused on the long term, obviously, because if you're an investor, that's what you're focused on. If you're a speculator, it's more the short-term intraday movements. I look for actually an opportunity, not necessarily to dollar cost average into the markets, into stocks that you might like, but is to do a rules-based approach. Look for those opportunities. If the market pulls back a little bit, now don't wait for 5 to 10% because we're probably not going to get it. I'd wait for 2%, maybe put a little bit more in, and if it goes up a little bit too quickly, take advantage of that if you can as well.
Thanks a lot, Brian.
Thank you.
And thank you for watching The Street.